Well, the markets are open, and let's take a look at our first quotes provided by Bar Chart. Let's start with the corn market here on a Monday morning, and it is kind of continuing the overnight trade. It is showing December corn down 2 at 6.79. Make it 6.79 and 3/4 now. So now we're all of a sudden only 1 1/4 lower. March down 1.5 pennies. In the soybean trade, as we go over there, as I mentioned last night, early in the Globex session, I believe it was like 14 lower in January soybeans. Now we're down just 4.5 cents at 14.57.5. It actually opened a little stronger than where it is right now, and it sold off a few cents here. There a little bit ago, I believe it was actually a little higher momentarily. January at 14.56.5 compares to March at 14.64. So still about a 7.5 cent spread between those two. Let's move on to the wheat. We'll start in Chicago here. We have the December contract now 13 higher at 8.60 3/4. Well, here again, kind of like on the soybeans, it had been under pressure overnight, and now we're up 13 cents. We're within, 2 cents of our high of the overnight and early morning trade right now. In the Kansas City market, you have December wheat. Look at this, 15 higher now at 9.68 1/4, within a penny of its high of the day. So they're starting to get in some buying activity on the nearby contracts, especially. Spring wheat trade in Minneapolis, December, up a dime at 9.64.5. Well, I'm looking forward to talking with Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky. A little bit of a bouncy market here this morning. Dewey, I was kind of caught off guard by the movement we saw in the soybeans and the wheat early on today. How about you?
Well, I'm not really caught off guard that much here. You got to keep in mind that, the combines are pretty much headed for the shed here right now. We're winding down corn and soybean harvest, so that means we've only got a couple of things to look at. First thing, we got an election here tomorrow. Second, trade's going to be focused on the crop report that will be out Wednesday. They'll be looking mostly at what the demand numbers show. And then right after that, we're going to be going into the holidays. We'll be looking at weather in South America. And, for the moment, we just don't have a lot to really talk about here.
I know you're a big proponent or user of the Elliott wave analysis, Elliott wave theory. And when you look at a longer term, let's say maybe a 6-month soybean chart here, do you have any signals from the Elliott wave that you apply on this?
Yeah, we're probably going to be going lower.
Why do you say that?
Because here a couple of months ago, we put in some major tops. Looks like we completed a 5-wave pattern that had been going in the rally that we've had for the past couple of years. So, that said and so forth, we're going to be looking at some downtime now.
Now, does that jive with your thoughts about Brazilian production and also our inability of shipping out our U.S. soybeans right now?
It goes partially along with it. Right now, we're still looking at the prospect for a record crop in South America, but also, too, you got to take in consideration the demand prospects here. China has still got some issues going there. We don't know when they're going to ease their COVID restrictions here. So you're talking about demand is probably going to be on the slack side here for a little while.
Kind of interesting how late last week the news stories were focusing on the fact that, China's going to open up, and the market rebounded at that time. And now this morning it sounds like they want to shut things down even more. So it just jumps headline to headline. When you look at a corn chart, what do you see there?
I look for corn to back off here as well. The thing about the corn market and also for the wheat market, our exports are absolutely lousy here. You look at the dollar is, for instance, lower here today, and we can't really get anything going in corn. Wheat is just up a little bit, but that looks to be mostly just a dead cat bounce from where the market got thrashed last week.
Okay, well, Dewey, we'll come back in a moment, and we'll go ahead and open up our livestock trade here on a Monday. Dewey Strickler is our guest. We'll be right back. We are back with Dewey Strickler. Now let's open up our livestock trade. We'll start with live cattle. And on the big board in our quotes provided by Bar Chart, we have December live cattle, 22 higher. We're at 151.87. Pretty close to the high of the opening range today, within about a nickel or a dime, I guess. February, now at 154.45, would be up just 7 cents on the day. So kind of a quiet open once again. Seems to have been the pattern here for the past week or so. Over on the feeder cattle market today, I'll call it narrowly mixed. We have January feeders currently 20 lower. We're at 179.42. That's about a $0.50 off of our earlier high this morning at the open. We have March now 2 lower at 181.60. That's only one tick of a move right now. Let's open up our lean hog trade, see what's going on there. Now here we're higher, and I'll point out we're led higher by the nearbys. Look at December, we're up 60 at 83.57, and you have February 67 higher, now at 87.10. So don't know if that's enough of a move to really merit much in the way of an explanation here, Dewey, but what do you think about that on the hogs?
I think, the hogs, they got a bit oversold here, and I think we're just looking at a little bit of a bounce in the market here right now for the moment. Marlin, I think that the meats have got some issues here, just like the grains. I think one of the big issues is going to be demand. When you look here, interest rates, they were up here last week. We're probably going to see continued increases in the rates. And also keep in mind that you're looking at a record credit card debt, and the interest rate on credit card now is around 21%.
Now, you were talking earlier about Chinese demand, and there seems to be this back and forth, whether they're shutting down even more or if they're actually opening up. And it seems like maybe the lean hog trade kind of hangs on every headline in that regard, does it not?
Yeah, you look at China, they're a big buyer of our pork and so forth. So, yes, everything leans on the thread of what China does.
Does that also impact our soybean trade then? Because if they have more hogs, that means they need more feed.
Yeah, the thing about when you get into the beans, we generally see China switch their interest starting about mid-November. And usually when they switch to South America, your bean exports drop anywhere from 65 to about 85% until the end of the marketing year.
What do you see on the live cattle? If you look at a December chart there, do you think they're maybe positioned to maybe put in a temporary top or what?
The cattle, if the Dees contract went up and set a new high here, it would not surprise me. But, we're getting kind of late in the game here, but it could make one more push up to a new high.
Is that unusual as you head into the holiday period?
Yeah, it is. But, you got a lot of unusual things happening here in this world right now with what's going on globally.
Well, that is a good point. Point taken. Let's take a look at the outside markets here real quickly. On the Dow Jones Industrial Average, they're cooling their jets. They were over 100 higher. Now they're up 55. December futures at 32,483. The U.S. dollar index, it had been showing a big loss. It's down 500 points right now at 110.275. Crude oil market was very quiet this morning when we came in. It's still down just 30 cents. Still up at 92.31 a barrel, though. Well, Dewey, thank you for talking with us to open up the week. I appreciate that. Dewey Strickler of AgWatch Market Advisors. So, Janet, there you have it. The markets are open.